Welcome to Big Money Monday on the Savvy Radio Show. Get ready, you are about to get paid. This show is designed to increase your financial intelligence every Monday.
Well, if you guys don't know, my name is Stephen Van Dahlenberg. I do the radio show. I've written a few books called The Savvy Landlord. And the reason why we do this event is basically it's around money, to help you raise money, to help you maybe fund someone else that needs money, aka private lender. Also is to help each other find deals. There's some rookies in here, there's some veterans in here, and this is your time to connect. But the main purpose of this, why we do this, is the thrust is about money. So if you don't like money, you probably should leave the room. I'm finishing up a book on money. If you have any questions about money, I spent probably the majority of my career of almost 20 years of investing all about banks. I'm a big borrower of money from banks. I have very little experience with private money. I just loaned out my second or third loan yesterday, funded a deal, but I love money. If you don't have this book, I definitely recommend you can get this on audio book. Tony Robbins is extremely thorough in his passion to educate people, personal development. This book, Money, is just extremely fascinating. He spent like almost 10 years writing this book and went and interviewed like hundreds of people, got to the very best hedge fund, real estate REITs. It is a good book. It's intense. It is like over 400 or 500 pages. I don't know if I could sit down and read it. I do have it on Kindle, but on audio book, it's extremely powerful, and I definitely recommend getting that. Well, 20 years it took him to write that book. And so it's like, if you ever study Anthony Robbins at all, he's like extremely intense person, like beyond recognition. He just interviewed and sought out and asked all the hard questions, like to the top hedge fund billionaire, what works? And he got those answers and wrote this book. It's exciting. Okay, first of all, I'm an average guy. Don't take my advice. Trust but verify. Okay, this is my disclaimer. Can't sue me. Welcome to this attorney in the room. Thank you. All right. So here's the deal. How do you borrow money? A lot of people, a lot of rookie investors, they're like, I don't have money. I can't get money. That is a lie and a fallacy. Okay, you can get money. There's money. There's so much money in this room. You just don't know. You're not trained. So you've got to think of it like opportunity. I read a book once. This is another book that I would recommend. It's out of print. It's called Making Money Out of Thin Air. It's from an Australian guy named Brian Sherr, Sherr. It's out of print, but he has written two amazing books. One is called Making Money Out of Thin Air, and he has this analogy in there. You close your eyes, you put a blindfold on, and opportunity is like money falling at the sky. We just are not trained to see it. And there's so much opportunity in real estate. First of all, it's collateralized. If you don't know what collateralization is, you probably should learn that. It should be your number one word. You should probably tattoo that on your hiney. Because that's what makes real estate so powerful, is that it's collateralized. So people are usually, I'll loan you money. If I had money to loan, I'd loan you money, because if you defaulted, what happens? You get that property. Well, you just rehab that property, so it's collateralized by that property. So it's like you can't go to the stock market and go borrow money against stocks. Well, you can put puts and options, but can I call my banker up tomorrow and say, hey, there's this stock called Enron. It's incredible. Can I borrow $100,000 and invest it? I know I'm going to make 14% return. No bank loans you money off of stocks, but banks loan all day long on real estate. So when you start thinking that way, you should be trained. You should never stop and think again, I can't buy this deal, I have no money. Your job should be, I should find this deal and lock it up, and the money will come. I know it's simple, and you may not understand that, but there's hundreds and hundreds of examples I can give you based on that. Where I went wrong is I did it the hard way. I wish there was a class. I wish there was a way. And this may be your class, this may be your life-changing situation, but I did it the hard way. I started out that I was low self-esteem. I didn't think I could afford it. I didn't think that I would qualify. I didn't have a W-2 job. I was a flunky club DJ. Didn't think that I can do all that stuff. That's stupid. That was 20 years ago. These are all the banks that I deal with right now, and all these banks are real estate friendly. I've gotten loans from every one of those banks up there. Now, does everybody recognize all those banks? Nope, you don't. But let's go over a couple of them. Number one, First Security Bank is the only bank that I'm aware of. There's another bank out there that will loan you money and give you cash at closing, no money down. Huh, Tori? His interview just came out this morning. You got to listen to Tori Elson's interview. 5 years in real estate, 8 units, almost $500,000. Zero, this guy right here, zero money in the game. How? First Security Bank. Bank of America sucks, don't go there. Allegiance Credit Union, they're okay. They changed their business model for a while there. They're pretty heavy in commercial money. And that's the money that I'm talking about today. So when people think I can't get a loan because you're W-2, that's probably owner-occupied money. That's not commercial money. When I'm talking about money, I'm talking about real estate-backed money, which is portfolio lending or commercial lending. Do you know the difference between that? That's where a lot of people get confused. A friend of mine that I was trying to help in Houston, hey man, I got 9 houses. I can only qualify for 10. I'm a W-2. I'm like, you're dumb. You need to get commercial money. As soon as he found the right bank, First Security, Great Nations Bank, McLean Bank, First Liberty Bank, there's portfolio lending or commercial money. So you got to understand the terminology between, and that's kind of why I'm writing this book on it. And if you have questions on it, and then I just got a huge loan from Impact Mortgage out of California. What they do is they have brokers that sell them. So there's another company called First American Mortgage. You guys ever heard of them? They're one of the largest Oklahoma mortgage people in Oklahoma City. The cool thing I found out, I just interviewed that guy. His podcast won't come out until next Tuesday, but they only charge $995 for a flat fee loan. Now, I got a $500,000 loan with Impact Mortgage. It cost me $10,000, but it was such a great deal, it didn't really matter. $10,000, does it sound like a lot of money? Does it sound like I'm some baller? No. The deal was worth almost $1 million. I needed $500,000. Impact Mortgage had no problem writing that loan, and they gladly. Well, actually, they charged 1%. The brokerage made 10. This brokerage in Oklahoma City called First American Mortgage only charges $995. So there's an interview that I got going on. His name's John Mayhew. If you're on my Facebook page, if you need his phone number, I'll give it to you. Very fascinating. They do sell mortgages. First Liberty Bank is a commercial lending, and First United Bank, they have a little bit more stringent, but they can loan up to like $3 million on a transaction, and they love apartments. They love apartments. Now, keep in mind, when you're dealing with these banks, they're all different. Some banks love apartments. Some banks hate apartments. Some banks don't like to flip short term. Some banks love builders. So every bank is different, and not all banks are the same. The only thing that I've ever noticed borrowing, and there's like 5 other banks on there that I don't even have up there. The one thing I did notice that they do have in common is their documents look the same. When no one educates you and teaches you this stuff, you just don't understand. So when I started seeing that, well, come to find out, I actually had to ask that question, and that's what you should be doing. You should be writing down questions, because we're going to have a question and answer here, and hopefully we can help each other and answer those questions. But I actually asked that question, and that banker was insecure. He's like, no, that's just the software we all use. Basically, it's a standard because there's code, or not code, but laws that they have to comply with, and there all have to be certain things that has to be displayed a certain way. So I thought that was interesting. Well, here's a quick little story of mine. Now I'm up to 155 units, but I started in 1999. My first deals were owner finance, which sucks. 2006 is the first time I actually got a real loan from a bank. Before, I just thought I was worthy, so I just fooled around for 7 years. Didn't think I could do it, and that's where I'm here today to tell you can. And then just exploded. And then from 2006 till today, that's all I do is borrow money from banks. All right, so questions are important. You need to ask and write down as many questions as possible. I think it would help you tremendously. school has corrupted us and said that if you ask a question, you're dummy, which is just dumb. So you really need to ask questions. Any questions so far? Is this good content so far?
Yeah.
Should we call Mr. Ramsey? Where the F are you? Because you suck. You're screwing me over. Has anybody ever seen this before? Did we do this presentation before? No? Cool.
Hey, Steve. So you talk about commercial versus portfolio.
Well, they're the same. Commercial and portfolio are the same.
Comparing that to W2.
That's just another word. So when I got I tried to get this loan at a bank on my social and my income. And if you're a real estate investor, your income should not be as grandioso as it should be or what you think it should be. So then I was like, well, you could, if you want to talk bankers' language, you could say portfolio borrowing, portfolio lending, also known as commercial money. If you learn these words, your level of respect and borrowing power goes way up. So that's kind of the main reason why I've been writing this book for a couple of years, is because just me having a conversation with a banker, the minute you meet a banker, they're constantly underwriting you right then.
Yes, absolutely.
Yeah, they're underwriting you. Just like your size and me. Well,
like
is he fat? Is he skinny? Is he sexy? Whatever. We're size everybody. Don't lie, you do. Is he worth anything? Like, could he help me? Is he from the hood because he talks funny? Bankers are the same way. Now, if you learn their language, your life will just be, it's just, one time I had to borrow money on an apartment building and I was already over my limit. And so this banker had to call the president, and it's called a policy exception. And they wrote this loan knowing that I was going to refinance it out 6 weeks later. But if I didn't know the language and I didn't know the word policy exception and I didn't know how to communicate and hold him to the fire, and the other bank burned me and they kept dragging their feet, I probably wouldn't have gotten that loan. And so that's how you just need to understand and learn and ask as many questions as possible. It's just going to make your borrowing power easier. You'll make more money. Life will be grand. And next thing you know, you should be standing up here, not me. What documents should you have ready before you meet the bank? Anybody want to take it? Joan, Kim?
Yeah.
Tell me what banks you should have for the bank. You're a seasoned investor. What documents do you need?
They always ask your balance sheet.
Balance sheet?
Current financial statement.
Financial statement.
And the income history of the last
That's awesome.
years.
Well, one of the main things is that you should have a financial statement. But lately, if you're at a certain level, they want, if you're borrowing over $1 million, they're asking you for a balance sheet. I've just known that for years. I never had the balance sheet until the last couple of years. People were like, "Where's your balance sheet?" And what is a balance sheet? Anybody want to define what a balance sheet is? So everybody's a sissy?
Assets, liability?
Assets, liability? No, that's kind of a financial statement. A balance sheet. Anybody know what the proper term is? What a balance sheet is? No one want to try? Ignacio? That's it right?
Yeah.
Okay. I'm Spanish, you can't tell, right?
Liability and asset.
Huh?
Liability and asset.
It's a snapshot of where you're at today. A balance sheet is what they want to know, because you could hustle and you could turn in your 2016 financials and you could be going under quickly. And a balance sheet is a snapshot of whatever you want to make it. Okay?
That's right.
Whatever it could be today, before I bought this property. It could be after I bought this property that was already rented. Now, some bankers want a balance sheet for first quarter, second quarter, third quarter. Some people want it monthly. Some people want it yearly. So you need to know when this banker is asking for this information. Now, this may not, in the beginning, this may not have has John asked you for a balance sheet yet?
No.
Yeah. When you get to a certain point where they feel like there's a risk issue, or you may be getting too fast, too big, they may ask for that, and you need to be ready and understand what that is. So that was worth your admission today, just to know what a balance sheet is.
Actually, they've been asking rent roll every year.
Yeah, you always should. Here's the things you should have. Number one, you should have a rent roll if you have real estate. Number two, you should have a financial statement. Number three, you should probably have your taxes done. Those are the main things that you're going to do to get your business. Now, a lot of fallacy is, I need to have a credit score, or I need to make this certain amount. That's not necessarily true. You can borrow money, hopefully with those banks, on your portfolio if you have enough equity in there, and they'll loan you money based on your assets. And that's the kind of money you want to borrow. You don't want to borrow money on your W-2 or because you have great income. You want to borrow money on the asset. And everybody knows what an asset is? Okay.
I got a question for you, Steve.
Yes, sir.
I want to be specific, but just pertaining to rent rolls. I've heard, hey, just get it done dirty. This is the rent, this is the property, maybe, picture a map or whatever. And then others are, hey, let's add in 5% or CapEx or vacancy and all that. How detailed would anyone recommend getting on that, or does it matter? Do you want to include all that just to show you?
The cool thing is, that's a great question. He's asking, should it be super detailed or should it be just what the rent is? Most real estate bankers are gonna analyze it and drop off a certain percentage of the vacancy automatically.
Okay.
If you have it already calculated for him, it's easy for them. They just look at it and they know. They usually back out the depreciation and interest because they know that you're not using, But you should have software and automatically like click a button and there's my rent roll. But if you don't, you should have the address, the rent, and market rent. Even if it's vacant, you should have that rent roll up there because that's potential gross amount of money that you're making. You want to make it look as bold and big as possible. It's their job to decipher. Like I know a lot of my units are under rented. That actually hurts you with a sophisticated banker. But we're trying to run this business based on cash flow. So, but to answer your question, you should have a rent roll. And if you don't have it, put it in a spreadsheet as soon as possible. And then you should get real elaborate, and that is where you have the rent minus your mortgage payment, taxes, insurance, and have all that on a spreadsheet. And that's, it's considered your portfolio. And it's not necessarily a financial statement. That's just another spreadsheet. And if you're really borrowing money, you need to have that. They're gonna want that information. So you should just have a spreadsheet with all your information on there all the time. Every time you buy a house, put it on the spreadsheet, and then put out the rent, market rent, taxes, insurance, the insurance policy number, the loan number. Because this happens to me all the time. I just sold a property. I'm like, what bank is that with? I mean, I'm dealing with like 20 banks. Oh, that's in a package deal. It's loan number blank. I've got to contact that bank and get a release for that loan because I'm not paying off the whole loan. I got 10 houses in one loan, and I got to get the ball rolling. It's not an easy payoff letter because you have to get approval from the bank to release that one house out of those 10. Okay? All right. Rich Dad says that your credit score doesn't matter if you have a financial statement. Is that true? What is a financial statement? How do you get one? Is that true?
Yes and no.
Who said yes and no? It's true.
Depends on the bank. I think a lot depends on the bank and who you're dealing with.
Well, your credit score necessarily doesn't matter if you have a bunch of equity or you're trying to refinance something. It really doesn't matter. It does help you when making decisions. If you're on the line and they're trying to borrow more or grow, the guy has a 700 credit score, he's obviously got character. So, but it doesn't, if you have a 500 credit score, can you still get money? Absolutely. I know someone that just borrowed money in 2017, has not filed their taxes in 10 years. But their business is successful and they have equity and they have real estate, and this particular bank loans on real estate, doesn't necessarily loan on them. Now that banker probably went the extra mile, realized the situation, and probably wanted to call cross collateralization over multiple properties for one loan. Of course I'll loan you money on that because if you default, I'm gonna take all 10. But still, you can get money with bad credit. Oh, and the financial statement. Everybody knows what financial statements, and that's what Blake said earlier, liabilities and assets. So is your car a liability or an asset? Depends.
It's paid for or not.
Okay, exactly. So your own personal residence is a liability. There's a liability. You're not making money off yourself. I charge my kids rent, but can't really. It's not enough. It's significant enough to say, Kennedy Grace pays me $2 a month. Oh, they pay rent at the crib and they tithe. They do it all. They learn. It was awesome. All right. So, any questions on the financial statement? You should write this down. Flip your paper over, homie. Everybody write down. You don't have blank paper? Okay. Everybody needs to have a financial statement. If you think you have none, you do have something. You need your shoes. There's a financial statement I saw that had Jordans on there. He did. He put them on there. Google it up. It's true. They're assets. Those crazy shoes are worth $150. Now this young kid, he had like 20 of them. And you can sell that stuff on eBay. I actually sold my old Jordans once. Someone paid me $60. I'm like, for some nasty shoes? I'm in the wrong business. I could be making some stuff. Oh, I should put that on the side hustle. Find shoes on Craigslist. I guarantee you, open up Craigslist, you find Jordans on there. Someone's selling them. Someone's making money. But everyone, the first thing you should do is do a financial statement. And the cool thing about Rich Dad Poor Dad, he's like, it's a report card of where you are in that snapshot. And I have to look at those every week in my world. How come some banks are willing to loan money on rental property and others are not? Anybody have a quick answer for that? Pat?
Well, it probably has to do with that bank's decision on how to make money, because there's some banks want to loan on cars. They kind of understand that business, and that's what they specialize in. Tinker Federal Credit Union is an example. Now, other banks have more comfortable with real estate. Other banks will loan to like medical practices and so forth, and it depends somewhat on the management of that bank and how they feel. Now, you mentioned First Security. Let me tell you about their situation. They're in a part of town that's somewhat depressed.
Okay.
They've looked at it and said, we want to go out into the marketplace and do something to make money. So that's what they've done.
Okay. So the easy answer is not all banks have that business model. The bank that I borrow a lot of real estate from, they don't even do owner-occupieds. You would think all banks loan money to owner-occupieds. That's the easiest and safest loan. People usually don't walk away from their own residence. It's a very safe loan for most banks. That's one bank's business model, right? But there's a bank that I deal with that has no owner-occupied. Why is that? Does anybody can kind of
Regulations.
Correct. Garen, superstar. That is correct. There's a whole mortgage department in most banks. They have to comply with Dodd-Frank. You got to do this thing called a CD. Anybody know what a CD is?
Certificate of deposit.
That's what I thought when I first heard it too. No, it's called closing disclosure statement.
Yeah.
CD, and that's for owner-occupieds. And if you're, if you've been a real estate investor for a little while and you've done some transactions, this just happened to me. The HUD was jacked up. I was like, hey, I'm not paying closing on this deal. You see the oh, okay. Yes, Mr. Van Callenberg, we'll just change. Yep. They redid the HUD right then. Can you do that now with the new regulations? No. Every time a new CD is released, you have to have 3 days has to be verified. It's like kind of a lemon law. So that's why that bank does not do that, because that's not their business model.
They also have a lot of other things to do with redlining and loaning certain amounts in certain neighborhoods and all. They come under the fair housing law.
Okay, so let's answer that question.
You're out of the fair housing law.
He mentioned one point that a lot of people don't know. There's this thing called redlining. Do you know what that means? Anybody has, besides Pat, anybody ever heard of redlining? That means certain bank. The cool thing is that there's a bank, MidFirst Bank, over on 23rd and Met. Does everybody know where that bank is? There's a Taco Bell right there. There's this little school there. Okay, that bank got in some trouble because they were loaning some money out, but not in their community, and that's called redlining. So you have to loan within your community. It's just another governmental regulated deal. It doesn't really affect us per se, but that's just what redlining is. Or I've actually had a banker say this. Well, some bankers can be racist and say funky things that, we don't loan this type of business. That's called redlining as well. What are balloons? Should I use them, avoid them, and what are the risks? Can anybody answer a balloon? What a balloon is?
Just due after a certain period of time.
Balloon payment, it's due at a certain time. Should I use them or avoid them? Should I use them or avoid them?
for it then.
I use them all the time.
Okay. Strategy. What the commercial money? We're talking about commercial money. Is that their business model?
Absolutely.
Absolutely. Why is that? If you understand why bankers do certain things, I never understood that. When I started out, I'm like, 3 years, I got to come up with this money. 5 years, I don't want balloons. But when I started studying banks, why do banks have balloons?
Just the rate.
Just the rate. They don't want to get locked in. Because, like, for example, these 30-year mortgages and the market tanks, Fed raises the rate, they start losing money. And they don't want to be trapped within a loan. So then you understand. Most banks don't want to call your loan due on the balloon. So that's the biggest fear of a rookie. They're like, I got to refinance soon. No, it's awesome. I love it. You know, I actually had a loan go through First Security Bank 15 years. It went, 10 years. It renewed like 3 or 4 times. And they just, hey, Mr. Van Kellenberg, your loan's due. What do you want to do? I just want to renew it. It was a 1-page document. And actually, you're allowed to ask for a reduction. When I got that loan 10 years ago, it was at 7%. And then 4 or 5 years ago is when I renewed that loan and I asked for a reduction. And I got that loan down to 6%. Interesting. That's the whole purpose of balloons. So it's not to hurt you or attack you. It's really for these jokers to make money. And that's why they're in business. Now, there is some risks there. Okay, what are the risks of balloons? So you can understand this. For you as a real estate investor, not for the bank.
Interest rates could go through the roof.
And they can all come due. So a strategy is to stack them. So some loans I have are 3 years, knowing that I'm going to hold them, keep them, sell them. Some of them are 5, some of them are 20, some of them are 30. So that's some of the risks. Because if you just, and some banks will give you a discount for a 3-year term, like say 6.25, and then they'll give you 6.5 on a 5-year term. Well, it's really like very minimal, the amount of money, but it just depends on what you're trying to do in that timetable. And so successful people think way in advance. Where am I going to be? What's my net worth going to be in 3 years from now? What am I going to do with this property? Is this going to be? I call this property a legacy property. Do I know I'm in the hood? Is this going to appreciate, or is this going to be just a cash flow property? If it's going to be a cash flow property, these are the type of loans I'm going to do. You got to understand the risks and what you're going to do with them. I've heard it's hard for financing if you're trying to buy a property through an LLC. Is that true? Has anybody ever heard that? Well, it is on residential with regular loans, right? If you call a regular bank, it is hard. But most banks, commercial money, prefer an LLC, and you should do it that way. You should always, it kind of gives you some liability protection, but it also, what does it show the banker? That you're a business, that you're legitimate.
But you're still signing personally.
You always will, unless you're Donald Trump. I always sign personal. I wouldn't be in this game. I have no problem. When I loan people money, I make them sign personal. I don't care if it's $500. My daughter, you be signing right here, girl. You gonna pay?
All my private monies.
I have no fear. I wouldn't be doing the deal. Then I wouldn't. If I can't put my name on it, then I'm not going to be doing the deal. And you should have that same respect for yourself. Small banks, large banks, like Bank of America. Which one's better?
Small.
Ultimately, for what we're doing, and probably up to 10 million. Now, when you get past 10 million, you can get some super duper rates at Bank of America. You can refinance some stuff at 3% and do some crazy stuff, 20-year AMs. There's all kinds of stuff you can do. But always focus on, people get into real estate and they're like, they run over to, Bank of America and they fill out an application and they get denied. The same person, go to the community bank and they get a pre-approval for $100,000 to buy real estate as an investment. So stick with the small banks. How do you determine what a small bank is?
Local credit union.
Local credit union. Now, credit unions are different than banks, so we'll just leave credit unions out of the game for now.
Isn't that what banks
So it could be offices. It's what their assets are. Okay, go to their website. Go look up all those webs. Go Google up community bank, and they're proud. We have 250 million in assets. First Security Bank, how much do you think they have? Only $48 million is what that bank's asset column is. Yep. 48 million.
They're hungry for good loans.
48 million. Now, I can get into some technicals. How much is a asset's worth with a bank? Because the Fed backs them up on a ratio. Well, we're not going to get into that. You can read the chapter. The deal is, now, a really good community bank, you bank at Claim Bank. Great bank. What's theirs? How much do you think their net worth is? Their assets?
Oh, I don't know. I'm sorry. I don't know. 600,
250.
250.
250. 250 million and below assets are the best banks to deal with, because they can make a decision right there on the spot. 250 million and below, anything over 200. Now, First United Bank is a very real estate friendly bank. They have over $1 billion in assets. Bank of America, billions of dollars. Anything that has the word B in it, just run away. But, anything that's 250 million and below, that's kind of the bank you want to do business with. They're fast. And you can figure this out. How many branches do they have? That real estate bank that only has 48 million, they only have one branch. So if they got 3 branches, how many branches? How long they've been in business? Every bank that you deal with, if you want to be successful as a real estate investor and you want to borrow as much money as possible, which is hopefully that you do, go to their effing webpage and read about the CEO. I know the guy at First Liberty Bank who runs that bank. Where that money? I know Nichols Hills Bank. It started with 10 guys with $1 million a person. They started that bank with 10 million. I mean, they're proud of what they do. Go and find out who the CEO is of that bank. Who's the president? Who runs it? Who's the loan officer? What is a loan officer? What does a senior vice president mean? What's a vice president mean? Know these terms and know who you're talking to, and you can get stuff done way faster, build relationships. And like I mentioned earlier, I was able to close that apartment building. I had to close in 5 days, and that bank did me a solid, even though I was over my limit. They gave me an exception. Should I have a separate loan on each property, or should I consolidate them? This is a good question. I wrote these. I was like, well,
Depends on your plan.
you do consolidate, okay?
Depends on your plan.
On your plan. Now, when I started out, I heard that you want to keep them all separate because you're more flexible. Well, it sounds like a nightmare to me. Kind of, 150 blocks. That's a lot of it. That's a lot of details. Now, it does depend on your plan, but a lot of people get nervous where you package them up. But this is what banks like: the same amount of effort that does to write that one loan for $50,000 is almost the same amount of effort to write a $500,000 loan. Same process. Which loan do they want to do? The $500,000. Which one are they going to make money on?
500.
Right. So if you're just starting out, say you got 10, 15 properties, or 5 or 2, and you really want to build relationships with bank, you might want to consolidate, move to another bank, and now your credit line just went back up on that bank. And you just keep borrowing. So you package them up, buy 4 or 5, 10, got 5, you go to another bank, maybe put on better terms, maybe get a 20-year AMS. Stillwater Bank is a 20-year bank. All-American Bank, have you heard of those banks? Is a 20-year AM bank. Yukon Bank is a 20-year AM bank. You might want to package up $200,000-300,000, go over there, and that bank where you did your acquisition, you can start that ball up all over again. So that's just the process. This is what I do. I use banks for specific reasons for acquisition, and then I use banks for long term. And you just grow your portfolio. That's how you continue to borrow more money. And if you buy the property right, you should be able to keep borrowing infinity, because if your ratios are correct, if you're buying right. Now, if you're leveraged out at 80%, you're probably not going to be able to refinance out of your acquisition bank over to this bank if you owe 80%. They want some equity in there just in case you do default.
Do your acquisition banks hit you with prepayment, or are you not worried about that?
I'm not. Anybody that charges you prepayment penalty is probably hard money. Because how does the bank make money on an acquisition?
Interest.
Origination.
They make money over 2 years, for sure. They don't want you to leave. But most banks that want business are not going to penalize you. Now, after you do it like a couple times, like 3 or 4, they're like, hey, we don't have to work this out. And there's some banks that will charge you a little bit more interest or a percentage or origination fee. You know, I've seen banks charge 2%. You know, I've also seen banks do free origination or half a point. Again, all this is negotiable too. Why do banks only loan 70% on rental properties, or 75 or 80%? Anybody know?
It's their tolerance for risk.
That's right. And every bank's different, guys. There's a lot of banks out there that loan at 80%. If you maybe 70%. So a lot of people get confused. They're like, well, is it your credit score? There's a lot of variables in there, but you can borrow 70% pretty much easily. Even at a bank that loans at 80 and you're only asking for 70, you seem what? Conservative. Or confident or willing to put money down. But there is some banks that start you out, some banks that get you going maybe only start off at 70. Doesn't make it any greater or better than what bank, but don't be confused. I was confused for many years that this one bank only loaned me 70 in the beginning. Now I was a rookie. This is a long time ago. It's 15 years ago. So I was like, but I thought that was the standard. I thought that only those banks. No, you can get in at 80. You know, if the deal's good enough, or if that bank has it.
You got to know what that's based on too. I mean, there's certain banks.
Criteria.
70% on ARV, and then the next bank might be 80% of the purchase price.
Yeah, that's true. Jimmy, good job. Jimmy brought a very avid point. You know, how do you want to borrow money, on ARV or the contract price? ARV. And ARV means average repaired value. So when I teach young people how to borrow money, I'm like, the first question you know, I love it. I'm gonna go. I've been at Bank First for 10 years. Like, go call them up. Yeah, we're gonna give you 75 off the contract, not the ARV. So they're penalizing you for being a successful real estate investor. You buy a $100,000 house, you get it under contract for 50. His name's Andrew Cross, and then you try to go borrow money, but they're only going to give you 75% of the contract price. They're penalizing. You know, it's your skill as a real estate investor to get it down to 50. So the first question you should ask your banker: how do you loan? Is it on ARV or contract price? You'll waste a lot of time. But there's a way to do no money down on contract price. You can cross collateralize, like I do this with apartments, where I get an apartment under contract and I'm getting it at 70% ARV, and I don't want to do a no money down, but I may use another property as cross collateralization. So it puts the value up, but they're only doing that one acquisition, and then after a year or two, I can just release that other property. So there's all kinds of tricks to still do no money down. Robert Allen, you should probably read all of his books, says to buy property with nothing down. Dave Ram says is to avoid debt and pay cash. Who am I supposed to listen to? Steve Van Calvin. Borrow. I was debt free. I'm not debt free today, I guess. Not anymore. But at one time I was actually debt free. I did the Dave Ramsey, went to the thing. Financial Peace University, it's great. You should read it, if anything. But there's just good debt and bad debt. And what you're doing with debt.
Robert Allen's good advice for business. Dave Ramsey's good advice for personal finance.
Yeah, it's a good way to put it. I like it. Good advice. And also, people always like, man, you're $3 million in debt. I don't even look at it like that. I'm thinking about how much money I make off of that $3 million that I'm in debt on. Let's call it what? Cash flow. Well, what's the name of the game? Cash flow. Why we're here? Cash flow. Right? I'm not trying to buy property, be cool. Hey, he's cool. He got No. Let's don't be confused. You know, I was reading another article the other day. A new movie came out with McDonald's. Did you guys see that? The autobiography of McDonald's?
Ray Kroc.
Yeah, Ray Kroc. There's a movie coming out. I don't know. I saw it somewhere.
Yeah.
Does anybody know what I'm talking about?
Yeah.
Okay.
Yeah.
Well, I guess, a lot of blogs are popping up on this stuff. People forget that they are not in the hamburger business. They own the most powerful real estate. I think they're the largest real estate landowners in the world, per se. The Chinese own a lot of federal buildings. I don't know if you guys know that. They invest in federal, like a lot of our post offices are owned by other countries, by the China. It's fascinating. But hey, we're in America. So, but McDonald's. So, what's another question? Anybody have any questions? Well, how do I rebuild my credit? How do you rebuild your credit? Well, first, you should use it. A lot of people don't know, and pay back on time. Pretty basic, right? How do I rebuild your credit? People don't know. How do I know when it's time to refinance? Ooh, this is a good question. When do I know to refinance? The world, my banker says, be safe. All this equity sitting there. When should you do it? Who wants to answer this one? Nobody wants to answer this one?
As soon as you can.
When you have enough equity.
Yeah, as soon as possible. That makes sense. Like, you don't buy the loan, do the acquisition, and then 2 days later refinance. That doesn't make sense because you're paying fees and stuff. But if you got $60,000 worth of equity sitting there in a property, and it's a solid property, and you have this agenda that you're going to keep that property, you should probably refinance that. Take that $60,000 out, go buy 5 more properties, or 2 more properties, or 3 more properties. But you should constantly be looking at your portfolio. I'm looking at my portfolio almost every day, every week, every month. What freaking house can I refinance? Oh, they're moving out? Great. Can I doll it up and sell it? Or not sell it, or sell it on terms, pull out the equity, whatever I need. Can I do it time? Is this perfect time to do a proper full-blown appraisal instead of just a drive-by appraisal? Did that market, did that neighborhood change? Oh, Paseo is hot. East Side is popping right now, right? When I was buying in the East Side 15 years ago, I ever thought I was on drugs. Oh, okay. What trends are you following? Where's the who knows where the next area is hot? Anybody know? Where's gonna be pandemonium?
Yukon.
Well, they're always steady. The hottest area. Anybody follow maps?
Will it be right there on 16th of Blackwater? 16th Street?
East side of Oklahoma City is going to be the hottest area growing.
Capitol Hill.
Midwest City, that way, Choctaw.
Linwood.
Oh, in town stuff, yeah.
Yeah, Oklahoma City. Linwood. Classen. And what's that? 9th Street, 10th Street? 10 and Penn.
That 10th Street corridor.
Yep. People, follow real estate, follow the money. Where's it going? Can you buy properties from banks, and how? Can you?
Sure.
Absolutely. You should be buying properties from banks. You should be checking REOs, tax sales. How do you do it? Figure it out. That's another class. Is it possible to negotiate interest rates with banks?
Yes.
You should. And for fun, I just tease these jokers. Come on, man. Blank, blank, blank's giving me 5. Why are you guys giving me 6? You'd be surprised it works. But we're just so intimidated. We're this small person, and they're this giant bank. There's no difference between that banker and myself. There's a lot of difference, actually. Because I'm residual income, and they are W-2. So who's going to win the game? Right? Who's going to win the game? They ain't gonna win. The government's going to win the game on them. Oop. Anyway, I don't want to get started. So, you should negotiate rates. Not you need to be. I don't know what's the proper word, but couth about it. PC, politically correct. Don't give me 5%. That ain't gonna work. But you might want to ask. Is that the best you could do? Or I heard the other day that First United Bank is doing 3.25%. And if you study banks, they're changing all the time. Their terms, if you get a big loan, they'll issue a term sheet, and that's only locked in for 20, 30 days. So don't think that you're going to get 6% today, and then 6 months from now you're going to get 6% again. That may not be the case. But if you have any kind of common sense, right? If they're changing that, wouldn't that mean that they're able to change it the other direction as well? On buying rental property, how long should the term be? 15, 20, 30 years.
What's your philosophy?
It's your philosophy. Well, first of all, you probably never own any property. So it just depends. Again, what's your goal here?
Buying for cash flow, you need the 30-year. If you're buying it for
Cash flow?
ownership, you need the 15-year.
Right. Cut it in half. The numbers work out the same. You want double cash flow? Get a 30-year term. Are you ever going to own the property in 30 years?
Who cares?
Never.
Cash cow.
I found a house that was a real bargain. It needs $20,000 worth of repairs. How do I get the financing for that rehab? Who wants to try that?
I know where you're getting private money.
You can get private money, sure. You can do 2 loans. Years ago, you can get rehab loans, you can get an acquisition loan, and then you can get a draw loan. Or you can
buy it right.
Or buy it right. Get it, exactly, that's the answer I'm looking for. You buy it at 70, 60%, and you can pull out all that cash at the acquisition. There's banks that will do that. Now, some banks, it depends on your relationship with the bank, they may give you all the cash up front. Or some banks will give you draws, and then you have to turn in a draw. But you can get cash at closing for a rehab if you get what type of appraisal? An RV. This is good information?
Yeah.
Okay. How do you ever get a second mortgage? Do you ever get a second mortgage on a property? Why or why not?
I don't.
You don't? I do. I pull out a second mortgage for cash. It's called a line of credit. Take that line of credit, you can go do some acquisitions, fast and furious, not messing around with any banks, because you got cash, you close it, then you refinance it, and you pay off that second mortgage. But people get all scared about second mortgage. Now, that is a demise that could hurt you and crush you if you're not organized or paying attention to what you're doing, when is it due, and how much money's on there, and you're robbing Peter to pay Paul. That some banks will not do that because they know from history that a lot of investors go down because they just get leveraged up so fast. Then a problem happens, AC bill happens, and this happens, and they don't have enough reserves. You should have some reserves first before you get into it. Do the banks care if I borrow the down payment from another source? I learned that from you. From you, Austin. Yeah, this guy sold this dude a property. He shows up with no money down. I'm like, how'd you got me to carry back the five? You got me to carry back the down money. That's pretty ingenious, pretty savvy. Like so this is for hypothetical. I sold him a $100,000 house. It appraised for $100,000. He got the appraisal done. And the bank was like, okay, it's worth $100. We'll loan you $80,000. Okay, but I sold it to him for $85,000. Just for whatever it is. It's a hot property. Cash flow is like a monster. And this guy John actually called me up and said, "Hey, would you mind carrying back $5,000?" I'm like, okay, no problem. X amount interest payment, a 1 year term. And I showed up to closing. The guy, got money at closing. He got the keys, and that bank wrote him a check for the difference. I don't know how he did it, but you can do it that way. So you can borrow money on a private money. Like say you got a $100,000 house, and you're getting it for $50,000, and you're dealing with a flunky bank, and a flunky bank says we'll only give you 80% of contract, which is you need to come up with like 5 G's. Let's say you can go borrow from a private money lender. They'll loan you the 5%. You communicate with them that they're going to put a second on there for a short amount of time. Then you go do the acquisition. You hold it for 3 to 6 months. You refinance it out. You cash that dude out. And you bought another house with no money down. So you need to know that. That's a little bit more advanced. But it's possible. I do it all the time. How do I build a personal relationship with a bank? How do you build a relationship with a bank?
Taking
Go to lunch. Go to lunch with them. If they're willing to go with you, they're busy. And so, don't patronize them and ask them. And like genuinely, walk up to somebody and talk to them. Build a relationship with them. Why are you in banking? How long you been? Go to their webpage and read about them. Right? Know about them. How long they've been a banker. What are the things that they like? Do they have kids? How long they've been loaning money to real estate investors, and why? Do you like this sector? Is this a space that you want to stay in? What's your agenda? Where are you going? Build a relationship with a banker, and your life will be so much easier in the future. Okay, hard money loan. Anybody know about hard money loans? All right, we're going to finish up right here. You can listen to Hard Money. I did an episode 169 on hard money. Here's those banks that I mentioned. These are very real estate friendly banks. First Security Bank, Great Nations Bank, Bank 7, Prosperity Bank, Valence Bank, Sooner State Bank, Quail Creek Bank, First Liberty Bank, Citizens Bank. So you may get denied by 3 of those banks, but there's 10 other banks out there that will loan you money if it's a good acquisition. Is that valuable? I just did all the work for you. I mean, seriously. I mean, that's all the banks right there. They're All American Bank on Reno. First, Quail Creek Bank loves apartments. Sooner State Bank they do construction loan. They do 2 loans at one time. They do kind of unique lending. They're a very real estate driven bank. Okay. Any questions? No questions? Everybody's millionaires?
Working
Or
on it.
striving to be?
Almost.
There's no doubt you will be. All right, well, I appreciate your time. Thanks for coming. Sorry about Mr. Ramsey. Hopefully the man's okay. He was a very important person in my life. So I think your time was well spent. You got some knowledge. Make sure you network. Take some fresh muffins with you. Don't forget that get your tickets for Investor Weekend. It's going to be popping.
Investor Weekend is not far off, with over 10 information sessions to increase your portfolio. Log on to www.investorweekend.com. Whether you are a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Join us for a powerful, knowledge-packed weekend with over 10 informational sessions that are bound to enlarge your real estate investments. You will hear from the best national and local real estate investors that will share practical and relevant experiences with you, the investor. There will be several networking sessions to connect with other like-minded people for potential funding, partnerships, and yes, hot deals. Go to www.investorweekend.com. Did you know we meet once a month for the Landlord Lunch meeting? The third Wednesday of every month, go to landlordlunch.com.